when they're in an extreme like they are right now relative to the last 26 weeks, that's my first code to say, positioning is pretty extreme on the long side from the commercials. So the commercials are really bullish. I want to look further and see if there's anything else that says maybe I should be looking to get involved in this market. Going down, we see here the sentiment index was recently very, very bearish, extreme from the advisors. So the advisors are the ones that are telling their clients what to buy or sell. They get really extreme, and when they're juxtaposed to the commercials, that's that combination we like to see. So what we see has happened last week is they popped out. You'll notice that this indicator pops in and out of these extreme readings really quick. What matters to me is that it was very recently in that extreme, and it's coming out across after a nice bullish up move. We got a nice move last week up, which could imply this move is underway, and it could confirm that even more if we get it up into the bullish extreme. But anyways, the main thing is it was recently oversold. Undervalued versus gold, the next pane is valuation. So where the gold line here shows us the corn relative to the price of gold over the last 26 weeks is very undervalued. So there's 3 codes. All I need is 3 to say, you know what, this needs to be on my radar for a trend change. Until the trend changes, I could anticipate the price to continue down. But the conditions here suggest that, hey, if this does turn around, this market is supported by fundamentals that suggest the trend change should be significant. Okay, down here we see what I call the bubble up. The bottom pane is the net positioning of the parties. The red line commercials, green line small specs, and blue line the large speculators. So when they start to create a little bubble, we can visually see it create a little bubble like this, kind of like this bubble here. These are major market turning points typically. So here's a bullish one that happened in the past. Had this little bubble up where the commercials got really long, the large specs got really short, created this little bubble in the positioning, net positioning lines. See, it preceded a nice market low, multi-week up move. Here it happened again here back in July of 2024. Little bubble created, and it preceded a mega up move. That was the one that started in August and just kept on going. So that's what we're seeing here. And we'll head on over here and see if there's anything to glean from open interest. So the bottom line here is open interest. So what we see is open interest has generally been decreasing on this whole down move. So the general speculators, the guys that are speculating in this market, they're not as interested. Their open interest is lower, but the commercials have been very, very interested by getting more long. So that's a good sign because these guys know the most about these markets fundamentally. So also the last few weeks open interest has increased. So we see here the last few weeks this little tick up. And who's been driving the increase? Well, it's the commercials.